Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is July 21st. It's a Tuesday. And yes, I'm sitting here and thinking, where in the world did July go? But days are just running into each other. But I've got some pretty good news. And after I give you this good news, yesterday I showed you a couple of stocks in a sector that's rising right now. I was talking about the home builders and a couple of other sectors. But today I want to talk about sectors, or one particular sector that's not doing well and that's not picking up, even though the overall environment is getting better. And I'll also give you the top or the weakest stock in that sector. So these are shorting opportunities and so forth. So let's get into it right now. So yesterday, after European leaders worked out a deal to support their virus-stricken economies, 27 European leaders agreed to a 1.8 trillion euro or $1.2 trillion budget and coronavirus recovery fund after one of their longest summits ever to cope with the biggest recession in history. Wow. Europe will establish 750 billion euros or $850 billion, partly based on common borrowing to be sent loans and grants to the hardest hit countries. That's going to help a lot. Investors were also encouraged by news from Oxford University that their experimental coronavirus vaccine prompted an immune response in hundreds of people who got a shot early in the trials. Other projects are also underway. Dr. Anthony Fauci, the nation's top infectious disease expert, well, it depends who you ask, will start its final testing. Moderna will start its final testing July 27. 30,000 plus people per person study is intended to prove if the shots are strong enough to protect against the COVID-19. Asian economies have been carrying out the new norm, balancing out openings. It's been mixed results. Tokyo has been seeing it. It's been getting hit hard. Triple-digit figures of daily news confirming cases and confirming 237 cases just for Tuesday. Japan has so far avoided the massive cases and deaths seen in harder hit nations like US, India, Brazil, parts of Europe. Japan has confirmed 26,000 cases and about 1,000 deaths. That's quite impressive, actually, in light of everything else we've seen, especially in China, India, and America. Crude oil prices. Crude oil are now at par. 84 is at par, which means crude oil companies are not going to be bleeding as much because that's what U.S. nations pay for a barrel of oil, between $39 and $41.50 a barrel. So at least they're not making money right now, but at least they're not bleeding money. So now I want to talk to you about some sectors. Now, yesterday I went through some sectors with you, and we went through this, and I explained to you how basic materials, they were higher than technology yesterday. Now technology's higher by a hair, but yesterday basic materials were higher. And I was talking up how home sales are really going through the roof. Refinancing is going through the roof. Mortgage applications are going through the roof. The commercial part of the economy is not seeing this, but the residential is. Obviously, because of COVID-19, commercial real estate is just dead. I mean, dead. But real estate is doing really well. But today, because of basic materials, and also stocks that are related to basic materials, like, for example, Scott Grow, the fertilizer, basic materials. Sherwin-Williams Paint doing really well. Why? Well, because when people refinance homes, when they buy homes, when they move, they paint their houses. They furnish, their houses. They resoil their houses. They plant. So all of these basic material stocks tend to go up. But today I want to talk about the one sector that's still lagging behind, the energy sector. And yes, even though energy prices are above $40 a barrel and U.S. companies are not bleeding anymore, but what about the last several months? And even though they're not bleeding right now, they're not making any money. They're just not bleeding cash right now. So over the last 30 days, the energy sector, boy, oh boy, talk about taking it under the chin, negative 12.9%. All right, negative 12.9%. So today I want to talk about some stocks that are not doing so well in the real estate sector. Let me give you those. So these are the strongest stocks. Let's look at the weakest stocks. We got Nordstrom's, ouch, airlines, Wells Fargo, Simon Property Group. That's commercial real estate REIT. Avoid this thing. Norwegian Airlines. And finally, we got ONEOK, OKE. Now, OKE is a energy company. And look at these numbers. 1 year return, negative 58%. 3 year return, negative 49%. 5 year revenue growth, negative 16%. 5 year dividend growth, negative. The only thing they've got going for them is 5 year earnings growth, but everything else is down. And again, let me show you how this chart looks. This is a stock I would avoid or sell short, especially right now. Now, it's below the 50-day moving average. It never even went to the 200-day moving average. It bounced a little bit. It went to the twilight zone, which is the area between the 200-day and the 50-day line, and then it bounced back lower. And again, now it's below the 50-day moving average, and you could see here this stock doesn't have a chance. So I would sell it short right around the 24.90 level, and I would put a buy stop right around the 34 level. But this stock is a dog. Let's look at this. Just drops, can't even go to the 200-day line, and then comes back down, and it looks like it's about to head down again. Another one is Oxy. Let's look at Oxy. And again, these are not good stocks. These are not strong stocks. So if you're long these stocks, liquidate them. If you're short these stocks, you're doing a great job. If you're thinking of bottom fishing, get that idea out of your head. Look at this. Again, tries to hit the 200-day line to the upside, dies out of the twilight zone, comes down, trading now below the 50-day moving average. And again, I would sell it right at the $12.50 level, and I would put a buy stop right around the $19 level. This thing's going to drop below $8 in my opinion. And if we look at the profile of the stock, you could see here, look at this. 1 year return, 70%. 3 year return, down 74%. 5 year return, down 77%. 5 year revenues, up 5%. That's terrible. 5 year earnings growth, negative 69%. And most importantly, when stocks start reducing their dividends, when they start clawing back money from their shareholders, watch out. Negative 48%. That's weakness. That's weakness. Look at this. Earnings growth versus previous year. Ouch. Earnings growth previous quarter. That's a dog. That's a dog with fleas. So if you are thinking of buying this stock, please don't. If you're holding this stock, you may want to consider liquidating the stock. And if you're thinking of shorting the stock, now we're thinking the same thing. All right. Now, be careful because this sector can bounce. But I'm going to tell you right now, based on what we've seen from the stock market, let me show you this to give you a rude awakening. The technology sector in the last month went up 7%. Energy prices, negative 12.9%. Over my cumulative average, negative 15%, while technology is up 18%. Down 15% versus up 18%. This is the 6-month, 3-month, and 1-month average. This actually gives us a nice little cumulative based on what's been going on since, let's see, February, March, April, May, June, July. Yeah, so we're right on there right now. We're at the 6-month mark. So this is pretty much giving us a really good idea of what happened between February now. And as you can see here, technology bounced back 18%. And energy is down 15%. Even for the last 30 days, it's down 12%. It's bad. So again, Oxy, you don't want to have this stock Oxy in your portfolio. And if you're smart, you'll sell it short. And the other one is ONEOK, OKE. These are dogs with fleas. Now, what would you do? What would you do if I told you that you can tap into Wall Street's best kept secret and that for the first time ever, the average Joe, 2 of my best friends are named Joe, so when I see the word Joe, it's kind of funny. The average Joe can see gains of 78%, 255%. Folks, how about 540% using Wall Street's money? That's the most important part. Well, believe me, it's true. Insiders have been exploiting what some call a secret time window to instantly capture untold sums of cash from the stock market. But one ex-hedge fund insider has exposed their inside secret, all right? And members of the Free Riders Club are collecting payouts from some of the world's best and most explosive stock moves happening right now. Folks, you can't afford to miss this. Without tying up any of your starting capital, I love this. Gains of 78%, 255%, 540% with Wall Street's money, collecting payouts from some of the most explosive moves. You can't afford to miss this. You cannot afford to miss this. Secret time windows, learn all about this today. Click on the link below to see how you can get in on the next trade. Folks, this is one of Wall Street's best kept secrets. Don't miss out on this. I'll talk to you guys soon and have a great day. Bye, everyone.